All right, good evening. Welcome everyone to the Market View commentary for Monday, the 3rd of February. And basically what we're going to focus on, plain and simple, is talk about stock market frustrations from last week and why some rules are for fools. And I'm just going to go ahead and I'm going to put that little disclaimer in there. All right, last week, fear of a global contagion for the coronavirus that we found out Lyme's disease will not cure. Even though I always thought Lyme with the corona is the way it's supposed to go, right? Isn't that what I understood? So out of curiosity, let's talk some facts here. Will, at its current pace and its current level, will the coronavirus cause any big drop in Apple's earnings? What do you think? Of course not, right? Well, in fact, if you remember, and I'm going to show you, Apple even guided a little bit lower and widened their spread for earnings next quarter, saying that, hey, it could affect us slightly, but they're still in the 63 to 67 billion range instead of going 65 to 67 billion. All right, is the coronavirus right now going to affect Disney in a meaningful way for their earnings? Will the coronavirus affect Disney in a meaningful way for their earnings? Okay, so a comment just came in, and Lance, I knew you would say something, but yes, right now it's shut down for 1 week. Their Disney China, right? So if I was to ask you, how much money is that going to cost Disney? What would you say? You don't know. So maybe a week of Disney Shanghai being shut down won't make or break their earnings, which I agree with. It should not make or break their earnings. Maud said 1/52nd of their profits. Correct, but Maud, we do go by the quarter, and I think it's only 12 weeks with February being in it. But more importantly, when you think about it, their movies, they're going to have Disney and Frozen. Their two big movies are where the bulk of their profits should come from for Disney. The other bulk of their profits should come from subscriber base on Disney Plus. They're not going to come from the Shanghai Disneyland. So I'll be honest with you, I think it's kind of a joke, and for all intents and purposes, it bugs me when fears of a global contagion reverberated throughout the financial markets. Let me just put this into perspective. How many people have gotten the virus? Give me a round number. I'll know the last time what I saw. My wife keeps me up to date on it. 3,000 plus. I'll even go so far as maybe 3,500 right now. And we know 300 and some odd had died. So let me ask you this question. How many people across the world die through the 4.5-month flu season, the pneumonia season, the influenza? So pretty interesting. And you know what? I should have told you, Lance, you're not allowed to say anything on this one. One came in and said a lot more. One came in and said, I thought we had it eradicated. And Lance said over 29,000, which is the correct answer. Over 29,000 people across the world, excuse me, not across the United States, across the world end up dying from influenza or the flu from October, November, December, January, and halfway through February, what they call the flu season. So here we lose 29,000 yearly, and right now we're making up a huge case of life or death over a coronavirus. And I'm not saying it's good or bad. I mean, obviously, I don't want to see anyone die from it either. But it's completely overblown. And right now, it has very little impact on our stock market. Now, we're down from the end of December just slightly. Amazon was catapulted above the trillion-dollar mark. And we had great earnings from Google here. Let me take that back. They beat on the top line. The earnings per share crushed it. $15.25 versus $12.23. But their revenues came in slightly down. And so they were, for all intents and purposes, they're down 4% after the hours here. Relatively rough. Now, airlines might take a hit. Cruise ships will take a hit. There are some things that are going to suffer from an influenza virus. But I just, for all intents and purposes, right now, I am not seeing the fear of our drop in our markets to lose 2.5%. I'm just not seeing it. So, something that was good for me. For the most part, for Boeing and for Apple for that matter, we had long puts in place through earnings. Cost basis of 13, trading at 17.42. Bank of America, we have some protection in place. Hold on one second. Let's get it for everyone here. Come on, internet. By the way, if I lose my internet today, I'm not getting it back. We have a huge winter storm warning out here in Utah. We are getting pounded with snow. All right, here we go. Bank of America. We've had puts on for earnings, 89 cents. We're making up 60 cents of the $1.50 down. Baidu. We have some Baidu long puts. Kevin, why haven't you taken them off? Well, one day doesn't make a trend for me. They're profitable. Baidu hasn't even had the earnings. What we spent 7.5 for are worth 11. We have the right to sell Baidu at 39. We came down from 45 down to 39, made money there. So we're sitting with some Baidu positions right now with protection on. Disney, we protected Disney at a much higher price. When it started to hit the fan a week and a half ago, Disney, we had protected at, where is Disney at, for crying out loud? 145. We'll most likely roll that down to capture a little bit of money and play it at 140. Collect that $3.50, $2.50. Now, where I want to go with today is, please don't think I haven't had some stock market frustrations. Please don't think I've asked myself on some long calls on Baidu that are up, 300-400%. Why the heck didn't I take some more off the table up then? Well, I was smart and I put some long puts on some deep in the money long calls on Apple. Why didn't I do a better job of protecting those? So obviously, I'm grateful for earnings to have protection on for core positions, but I'm frustrated that I wouldn't take more profits off the table and maybe do a better job protecting all long call / stock replacement positions. Of course, I'm going to go through that frustration, but I'm looking for numbers. I'm not looking for, hey, it's been up, don't you think you should protect it now? Well, give me a reason. Will the coronavirus? Okay. As naive as I thought with my non-doctor skills, I thought, damn, they've made a virus out of drinking Corona beer. That's gotta suck. Well, Kevin, we were slightly oversold. Or excuse me, overbought. Which is true. We were. But that doesn't necessarily tell me, hey, it's time to go spend money on protection. Looking back, of course, I wish I had bought more protection. But our core positions are protected. We took profits on leap long call positions. And we're talking about 100% plus profits. And we'll re-enter positions here soon, which will probably take off quicker next time when it comes to our market starting to fall. So very politely, and no, I'm not throwing you underneath the bus, Lance. But a comment I made to Lance earlier was, and I think Rich, I made the comment to, understand that rules in stock market trading are for fools. Goal, make as much money as you can while taking as little risk possible. Not taking no risk, taking a little risk. My rules that sometimes are very foolish. I'm not going to pretend that I don't have any because we know that I do, right? But simply, my rules, let positions run when bullish. No brainer. At least it seemed like a no-brainer to me. I use limit orders to exit option trades to get my desired return on investment. Which, in all honesty, I'll be 100% honest with you, poor Kiev put up with me kind of getting pissed off. Poor Kiev dealt with me saying, damn it, Kiev, I didn't get filled. I didn't get filled on an exit on Baidu last week. And I really got pissed off at him, partially because he put the order in, partially because I said, yeah, we'll adjust it the last 30 minutes, or maybe we'll let it go another week. And partially because he was the person that was in front of me that I didn't have to live with. So my wife wouldn't deal with me being in a pissed off mood at her, right? And all of a sudden, what happened? Baidu said, hey, we're going to postpone our earnings 3 weeks out to the 27th of February. In fact, I have it all down here for you. We came up with, let's see here. Where's my Baidu? Here it is. Dow Jones release. Hey, Baidu company is going to take a precautionary measures that they're going to have their earnings conference call now on February 27th. But they expect the revenue to be in the range of 20.83 billion to 28.9, an increase of 4 to 6% year over year. And not only that, but its guidance range is now on the upper side that was needed. Not only that, core revenue will still grow 4 to 6 compared with guidance of 0 to 6. And that was it. For all intents and purposes, here's a pre-announcement. Kevin, why did you not take off long put positions today on Baidu? Well, one day does not make a trend. If I was to look at Baidu right now, Baidu. 693 down 16 cents. I'm going to want to see the open tomorrow before I pull the trigger and take some protection off of Baidu. As I take a look at their chart, I do understand this is the first day of a month, so new money can be put to work, but it's still technically bearish on the RSI. Heck of a bounce back above the 50-day. But we now have a new set of pivot points. Did not stay above the main new set pivot point at 130. 140 is the high side pivot point that it would have to get above till it hits resistance. For me, that's a little worrisome. I don't like the MACD. I do like the Williams percent R. Plain and simple, we're going to get a lot of conflicting data probably for the next 6 weeks. Maybe even until it's time for people to sell some positions off in for tax selling. So I'm not ready to go ripping off protection. I'm not comfortable with the, how would I say it? Not with the uncertainty of the market, but with the irrationality. And I'm not sure if I'm willing to risk being insolvent or straight stock positions without using protection. Can someone answer me right now? Why do we collar trade? Why are we collar traders? There's a pretty good reason. Why are we collar traders? And 3 of you answered. Protection, to hedge. So when we're wrong, we can still participate in the market. Lance, I'll be honest with you, sometimes I think you say things just to get my goat. But man, you're right on today. We protect so we never miss an up day in the market. We protect for uncertainty. We have long puts on to hedge our more expensive, our larger positions. Yeah, you know what? Apple, that had, for me, big numbers. $80,000, $90,000 is still a big number for me. Apple had big numbers on some leap long calls. So I added a short call for protection. Baidu had 400% returns, or 350 to 400% returns. But they were a smaller number, and I did not put protection on, but I started to trim. Someone asked me today, what do you think is going to happen? And I got a lot of questions on well, why didn't you do this? And I'll be honest with you, my crystal ball sometimes gets fuzzy. And my predictions of exactly what's going to happen in the stock market aren't always correct. Someone just typed in, you're the knower of all things, and, leave it to Lance to be a smartass. I thought you were a market expert. And I'm saying, that's how I just read your comment. I thought you're a market expert. You're the knower of all things, Kevin. Now, I know Maud, she probably wouldn't say it that way, but Lance, I could see you saying that. And where's my Davids today? Dave and David, you're awfully quiet, both of you. Yes, I'm not always going to get everything right. And yes, Keeve and I probably should have trimmed earlier. But we're still not in a bad place. And it was really interesting because the conversation was with Keeve. And the conversation was, damn it, I've missed $6 on Baidu, right? And my answer to him was not really compassionate. It was, $6 of upward movement on Baidu, which is only $2.25 on the leap long calls, in $114 potential upward movement. Isn't that bad? Keeve, you're allowed to miss $6 of $114 potential movement. You're allowed to miss $6 of a $48 movement on it already. Keeve, you're not going to get the tops of the tops and the bottoms of the bottoms every single time. Well, you are beating yourself up on Friday. I know, and thank God we didn't sell off. Because that was my $2.25 today. Damn it, Kevin. When you don't sell off, it works for you. Yep, because I'm just that good, right? Or I got lucky. I went through 45 minutes on Friday, maybe an hour and a half, being pissed. When the market was still open and I could have adjusted it myself. If you don't think I go through some frustrations, we need to talk more on the phone. Because in real life, I go through some of the same frustrations you guys go through. And my poor wife has to hear quite a bit of it. But again, in the big scheme of things, it's nothing but a thing. For us, it's going to be an opportunity. Coronavirus minus the Lyme/worm is an opportunity to lower cost basis, reposition profitable man, my typing is awesome today. Reposition profitable option positions to give them more time And I'm also going to say, I believe that we can enter new positions at a lower cost basis than a week ago. So I'm okay. I'm okay with where we're at. I'm okay with the way things are going. I can live with it. The question is, can some of you? I've gotten quite a few texts, and I guess most recently, one of the best ways to reach me is just send me a text. Send me a text, let me know what you're thinking, what you're feeling. That way I can read it, and I've got something to prepare for you when I call up. But you can send me a text. You can send me a text and you can hear me say, hey, I'm seeing this. I'm seeing that. I think this, I think that. And obviously kudos to Lance, Dave, Rich, David, Bill. I think you guys know me long enough that we can have a debate about it. We can have a conversation about it. I can give you my 2 cents. But remember, when it comes down to it, it's only 2 cents. And that's what we do. That's what we do, and that's how we make sure that things are taken care of and done the way that they need to be done. If you ask me where I think the market's going to end this week, I really want to say higher. But I'm going to go with the trend that I think today and tomorrow we might just see some new money enter in. But that's it. We do have some support. I'm not sure what the doji is going to mean sitting right there at the 50-day. Will that be the reversal to go back bullish? What it should be, but a doji after a gap, whole different meaning, right? Technically, we're bearish on the Dow. It's the worst looking index. We do have an oversold, an oversold on the Williams percent R, but it's only 30 stocks. It's not important. The spiders, large cap index, definitely not looking good. But we do get this little uptick. We do have the uptick on the Williams percent R. As I take a look at it, I feel, hey, you know what? We're okay. We're okay. We're going to make it. We're good to go. And on the NASDAQ, we're still not technically bearish. So once again, I can't say what I want to say. Once again, I think we do have just a bit of an opportunity here on an illness that's somewhat scary, but not necessarily a make or break for our markets. It's just not. All right. I'm going to go with 2% down in February. I do believe my 2% down in February means that we will have some stocks that will beat the market. economic reports, and you know what? For the life of me, I didn't follow the economic reports today. That's a little unusual for me. Normally I do every single day. Auto and truck sales didn't come in. Construction spending was down. I would think that it would be down because it's Christmas. Not that it stops, but you do see a slowdown. -2 is a little worrisome. ISM manufacturing actually came in at 50.9, which is now bullish again from a 48.5 and a revised 47.2. Our manufacturing index turned and it went bullish on us. I really wish I had the auto and truck sales, but I don't know if those came in or why those came in. So I'm going to have to do some research there. It's rather important to me, though, because for earnings, we got Ford and Disney tomorrow. Ford and Disney tomorrow will, I think, be rather important. A comment. Maybe if there's no impeachment, we'll get a bounce. And yes, I would tend to agree with that. I'll be honest with you, though. I'm not sure our markets are really moving on the thoughts of impeachment at this time. I do think that has taken a back seat to coronavirus and earnings, but I would love in a news-driven market, if there's no impeachment and they take a vote on it, most definitely. It'll be interesting to see what the Iowa caucuses come up with today. And I'll be honest with you, I love that Bloomberg only had 45 people at his event, said there were 130, and Trump had over 3,000 for his little stop off. I giggle. I giggle because obviously I am a Republican at heart, and I really don't like Bloomberg at all. Possible worries for a year may fear return of inflation, rising costs, hampering earnings, presidential elections, U.S.-China, accelerate the decoupling, or they accelerate their phase 2 deal. Don't forget tax breaks could be in there. We still have a problem with oil and energies. We also have a problem where financials are not quite keeping up like you would expect them. So in all honesty, there's a lot of worry out there on our stock market. There's quite a bit that can come up that will change or affect some of the worries that we have right now in our stock market and worries in our markets that can cause us some issues. But earnings, Google, obviously we have Clorox and we're doing okay. Qualcomm on Wednesday, Merck, Humana, General Motors, Yum, China on Wednesday. Tuesday we have Clorox, ConocoPhillips, Emerson, McKesson, Ralph Lauren, Ethan Allen, Gilead, Snap. Thursday, Arch Coal. What else do we have? We have Uber, Twitter, Kellogg, Bristol Myers, Grey Goose. We have Grey Goose on Friday. Economic reports, ADP employment's the big one on Wednesday. I didn't finish it. We have the average work week, which means we have unemployment rate. We typically have hourly earnings. And there's one I'm missing. Wholesale inventories, consumer credit. So inventories and consumer credit. If I went to how I'm looking to trade, we obviously have the China numbers today. ECB, President Lagarde speaks to us, and I think I spelled that right? Lagarde. Yep. I would have, the reason why I put her in there, I would expect that we need to pay attention to what's said, especially when it comes to England, Britain no longer being in the ECB. So that's a little something to pay attention to on what she says in her speech. If I was going to tell you how I'm looking to trade, which I don't have in here, I'm still going through earnings. I'm still not protecting some stuff that's been way out there in time. Micron, especially Micron and Newmont Mines, because Micron is a semiconductor, they've done so well. Newmont Mines, because it's the gold, they've done so well. Target's way out there in time, they're at their bottom. There's some things that technically are low that can go lower that I'm choosing not to protect at this time. Facebook, what a pisser. I don't know how to say it any different than that. Mixed earnings. Nice to see that they're up today. They should really be knocking it out of the park. I thought they would have beat on their earnings per share more like we thought we would have seen Google today. Instead, they fell 6% on Thursday, not on slower growth. I disagree with this, but on the metric that their expenses was up by 51%. I kind of want to say, hey, dummies, they paid a $5 billion fine. That's an expense. Figure it out. Hey, Q4 acceleration, not really a surprise. Once again, figure it out. That's what I tell my kids. When my kids are just being doughheads to each other, my usual comment, figure it out. Don't let daddy tell you what to do. Figure it out. You're old enough to figure it out. They're not doing bad. Ad revenue slowed to 26.4 instead of a 26.4. 1.8%, right? They're still making money. Their outlook's unchanged for 2020. 15% GAR still in place. Compound annual growth rate. Operational metrics still remain robust. Still gaining new users. I put it in here because there's a lot of great information. Not all of it is exactly 100% justifying why they should be going up higher. But if you want to read of why I'm in Facebook, this is it right here. Really comes down to they're still making money. And they're still making tons of money. Not a little bit. They're still making billions of dollars. If you ask me, a PE ratio of 24.5 is still cheap for this type of company. When it really comes down to it, their numbers tell me they can still be a $250 plus company, if not $300 plus company by the end of the year. I put this in here so you can see it. I put one in here. I bought Apple in 2013, and now I'm selling, and here is why. And really what it comes down to it is its valuation. Its valuation is too high for him at 25, which for me, as I think about it, and I look at what this author is saying, I must admit, I do find it hilarious. I do find it somewhat ridiculously hilarious. Because they obviously were never in Apple in Steve Jobs' era. They've never been in Apple when it had a higher PE. And yes, their information is correct. But I think they really should have sold off at around 250. They're choosing to get out now because of valuation. And I think they're going to leave quite a bit of money on the table. And they still haven't connected the dots for me to agree with where they're at. If anything, this chart by outstanding shares tells you they're still buying a ton of their shares. Hence, if you're still buying a ton of their shares back and you have a bottom, a put on Apple by their share count buyback, good luck. Really interesting. Read through it again. A lot of information, but I think with this information, you're going to see that maybe we're not at a top. Maybe he's a little foolish to sell out here, but of course you're going to take a profit. Here's the news on the coronavirus and how it's going to shut down some stores in China. I'll be honest with you, it really will not affect Apple's numbers, even if it lasts for another 6 weeks. They already accounted for some of this, and golly, I still have a 400 target rating here, so it's really easy to see where that's maybe not so important. Last but not least, I am in Freeport McMoran for 3 people. With that said, a great article on where people don't understand the long-term demand for copper, gold, and all metals that have some significant use, and not just a industrial type cycle, but in more of a first world country growth cycle instead of a third world growth country cycle. Just feel free to read through it, and I found it interesting myself. With that said, my Apple bull call that is a 315, 320. I am not adjusting it as of yet. I'm keeping it right where it's at. I want more time to bleed off my short call before I take it off, and the numbers don't add up right now. If I was to show you my own position there, let me show you how I look at the numbers. Who did I miss? So FCX update and copper was on its low explanation. FCX has more than just copper involved in its basket of currencies, that basket of metals that it mines. So there's more than just copper. Plus, it might be at a point where it's considered to be at a low. But it's more than just copper that makes up FCX. So that could be the explanation there, Maud. Apple. I got the worst fill out of all you guys. No, I didn't. 295. So someone asked, why didn't you take this off? Well, if I have 295 and I don't get my credit of 268, that now increases my risk to over $5. To over $5, which means I need Apple to trade at 325. And at this point, I'm not ready to increase my risk to that number by taking off my short calls. I still feel I need $2 of that $2.68. I still feel that I need an opportunity or some profit, a reason before I take it off and or move it down to the 315. If I was to look at a 315 and do a roll on it, I'm going to pick up an extra $3, which could pay. I'll be honest with you, it obviously could pay for my my overall position in the trade. But again, it just comes back down to being comfortable with that position. I'd struggle with it. I would really struggle with it at 315. I might like the 317 and a half, but that still gives me 95 cents of risk. And where I don't know if I could get that back on a bounce back up. So stay tuned on Tuesday for my adjustment, my explanation on Apple. Maud, did that answer your question on FCX? Lance, would I get into new leap long calls on Baidu? The answer is yes. Most likely you will see some that had some shaved off at June. We're going to go out to a January 21, and we're going to add some more leap long calls on Baidu. So again, short answer, yes. I definitely like a new leap position on Baidu, and I would enter it as early as tomorrow. Are there any other questions I can answer for you guys? Jim Kohler, nice to see you with us today again. And I'm going to introduce Johnny tomorrow. But we've got a new individual here, Johnny. Nice to see you with us, and nice to have you here today. Johnny, but I'm going to make an introduction for you tomorrow. All right, guys. Hey, have a wonderful evening. I'm glad you're here with us tonight. I will get this posted up tonight. Have a great tomorrow, hopefully. We do have some Some up futures right now, minus Google. It's dragging down the NASDAQ about 7 points. So we'll see where we open up tomorrow. Guys, take care until trade finds adjustment tomorrow night. Have a good day. Bye-bye.